Welcome once again to my channel. God bless you. Today we are going to look at allowable and disallowable expenses. I found out that this particular topic is something that is confusing the student. Allowable, disallowable, on how to fix it has been an issue for some of the students. Now, in computing your company income tax, that is your CIT, the only thing that is allowed on the expense side of your income statement is the allowable expenses. Just the allowable. Now, if you don't know the difference between the allowable and disallowable expenses, you will find that you will mob the two together. And once you mob the two together and submit to the FRS, to the tax authority, what they will do is that they will recompute it. They will pick up the net profit and add back all the disallowable expenses that you have added as allowable expenses. They will add it up and recompute your tax liability for you. So your knowledge of allowable and disallowable expenses will help you a lot in computing your company income tax. And that is why I have singled out this particular one out first, so that we'll handle it to the core, so that we can know the difference, where to fix it, where not to fix it, what to do and what not to do. Now, so let's dig deep into it. Now, allowable expenses, also known as what? Deductible expenses. They are those expenses that are deductible. A cost that individual or business can subtract from their total income to calculate their taxable income. Now, there are those deductions. Just listen to me. There are those deductions that companies are what? Allowed to deduct from their income. There are specific expenses that companies are allowed to deduct from their income. Those are allowable expenses. Now, these expenses are generally considered legitimate and necessary for the purpose of earning income or conducting business operation. Now, the expenses that is allowable are those ones that are legitimate to the business, that are concerned to the business, those ones that are related to the business. Are you getting me? If you incur any expenses that is not related to the business, it is disallowable. Once the tax authority lay hands on it, they are going to do what? Add it back. But once it's legitimate, allowable, they will let it go. So there are those legitimate expenses that are deducted from the income of a business. Now, let's see some of the... Now, allowable expenses can vary depending on the jurisdiction and the specific rules and regulations governing taxation. Let's take a look at the example of allowable expenses. Include business-related traveling expenses. For example, if you engage, let's take for example maybe one of the director of the business of the company wants to travel to UK for his own personal vacation. The travel is not related, will not yield any income to the company. It will not yield any profit to the company, but he just, for his personal relaxation, you say, let me travel to abroad and go and relax a little. That money is what? Disallowable, because it is not associated with what? The business. Another example, maybe one of the director decide, or maybe the owner of the company per se decide, okay, let me remove money and buy some jewelry for my wife. It's not related to the business. If you want to buy jewelry for your wife, you buy jewelry from the amount you are earning from the business. You are being paid your salary, yes, or your profit, yes, not from the company's expenses. No, 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 no. You take that from your own personal money, income, to go and buy whatever you want to buy for your wife. So if he's making that expenses at the expense of the company, it is what disallowable. Now, office rent is necessary for the business. Employee's salary, very vital to the business, because if you didn't pay the salary, nobody will work. Advertising costs, for you to advertise your business, it is allowable. Professional fee, consulting, audit fee, they are allowable. They are peculiar to the business. And contribution to approved pension plans. Contribution to approved pension plans. So these expenses now are what associated with the business. It is because of the business that all these expenses are being what incurred. Now let's go detail into different kinds of allowable expenses. I believe you have idea of what allowable expenses is. There are those legitimate deductions associated with the business, those expenses that associate with the business are what allowable expenses. Now let's take a look at this so you can see this. I have opportunity of them, but let's just take few. Business related travel expenses for work purpose is allowable. Cost of goods sold for businesses is allowable. Rent and maintenance expenses for business premises, they are what allowable. Rent, the shop you are staying, the building you are staying is for the purpose of the business, so that is the rent. Maintenance of office equipment, your plant machinery, you are maintaining them, you are fueling them, you are servicing them, they are for the purpose of the business. They generate money, they are used to generate money for the business, so they are related with the business, they are allowable. Salaries and wages, very key. If you didn't pay your employee, who will do the work for you? Repair and maintenance expenses for repair and maintenance, they are allowable. Professional fee and subscription directly related to the business operation. This subscription must be directly related to the business operation. You can do your subscription for DSTV in the office. Subscription for DSTV in the office. Subscription for your data in the office, for your Wi-Fi and all that in the office. But anyone that the director say, okay, let me do this for my house, and he's taking that money from the company, it is what disallowable. It's not related to the business. Every expenses must be related to the business. Medical expenses for employee, subject to certain conditions. Yes, your employee are entitled to some medical stuffs. You can travel, you can pay medical expenses for your employee, you can pay for yourself, but anyone as outside your staff, maybe one of your brother, your relation is having some difficulty, that you pick money from the company and pay, is disallowable. You have to pay from what you are earning as the director of the business. Are you with me? That is medical. Pension contribution is key, allowable. Research and development expenses for qualifying, allowable. Interest paid on business loan, they are allowable. You collected loan for the purpose of the business from bank. and the bank said that you are going to pay a particular amount of money as interest, that interest on top is allowable because it's for the purpose of the business. So it's allowable. Renovation of office premises. Yeah, you want your office to look very fine, very good. You renovate your office. It is what? Allowable. But if the director decides to go and renovate his house, is what? Disallowable expenses, because it's not for the purpose of the business. He wants to beautify his own house. He is earning money from the business, so he should use his own money and renovate his house. So these are the key how you can differentiate it. All these are allowable, associated with the business. Royalty, let me just bad debt written off, cost incurred for employee training and development, they are allowable for training and development. Advertising, cost of acquiring, registering patients, and so on. So with this, I believe you can differentiate. You now know what allowable expenses is all about. Now let's check out for disallowable expenses. Let's check out for disallowable expenses. Yes, I want to do this so that when I'm doing computing for the company income tax, I will not be explaining more on this. So disallowable expenses are also referred to as non-deductible expenses, are costs that individual or business are not allowed to deduct from their total income when calculating their taxable income. It's just an opposite of allowable expenses. But for you to be able to identify them is what I'm here for. These expenses may be considered personal in nature, unrelated to the business operation, or not meeting specific criteria set by tax authority. It might be personal. It might not be related to the business. It might not be those ones that the tax authority permits. Any expenses that the director is doing as for personal use is disallowable. They are adding it back. Disallowable expenses typically include personal living expenses. I said it. He wants to improve his life. He wants to buy a car for the wife. He wants to pay the children's school fees. It's not from the company that you pay your children's school fees. You are earning amount from the company. You use it and settle your children's school fees. Fine and penalty. Now, let me talk a little bit on this fine and penalty. Maybe, for example, you carried your private car and you're going to work as a director. And your driver's license has expired. The company did not make provision to foot your driver's license. Then you say, because I'm going to work, because I'm the director, give me driver's license money. You pull out driver's license money. Or maybe environmental fee levy that you're supposed to pay in your estate. You apportion it back to the company. That company should pay it. Is disallowable. They will add it back to your tax and recompute it, and your tax liability will increase. So it's better you know the difference. Contributions, political contribution, and you say, oh yes, I want to contribute to a particular political party. I want to contribute to this political party, PPPP, to AAAA, to CCCC. Those ones, are they permitted by the tax authority? They are not identified by the tax authority for you to contribute to them, except the ones that the tax authority permits and you contribute to them. Those ones becomes allowable. But if the tax authority did not specify that this is what you should, these people, you can contribute to them, you can give them money, and you do that you on your own, they will add it back. And expenditure not directly related to the production of income. Any expenses that is not directly related to the production of income. These expenses are not eligible for deduction, and attempting to claim them as deduction could lead to tax penalty audit. Maybe you want to contribute money to one maybe IDP camp, one vulnerable organization like that. And those organizations are not recognized by the tax authority for you to contribute money to them, and you give them money, is disallowable expenses. So the tax authority must specify the people you are to give money to before it becomes allowable. Your money, the money that you spend on your personal self and your household is disallowable. The money that are not related to the business and you spend is what? Disallowable. And all this might lead to what? Penalty. In fact, tax authority will fine you. Now let's take a look at the non-allowable expenses, just as we look at the allowable ones. I hope you're getting the difference clear. It's 20 also, but we're going to rush. Personal living will handle that because of our explanation. Entertainment expenses unrelated to business opportunity. Your friends, maybe you are in the office and your friends enter, you say, bring wine, order wine, give them wine. They didn't come for the purpose of any business, so they did not come to discuss business issues with you. They just come to say, yeah, my old friend, and you scatter table, chicken, beers. Those money are disallowable. They will add it back. That is why at times when you do all this, they will need a breakdown. Tax authority at times might demand for the breakdown of your expenses. Political contribution and expenses, are they registered, recognized by the tax authority? If no, it's disallowable. Personal loan interest payments. You collect loan, you don't expect the company to pay your interest for you. You pay it yourself. And if you use the company money to pay it, they will add it back. These are what? Disallowable. Community costs for employees. Maybe because you are an employee of this organization, you say that, okay, I'm going to this place, you use company money. Something for your personal outing, you use company money. Something for your personal stuff, you use company money. No, you don't do that. You don't use company money for your personal outing. Every money you are using for the company must be for the purpose of the company, and it must be for discussion that will yield the company profit. So any outing that is going that is not for the purpose of the company, that will not yield profit to the company, is what? Disallowable. Cost of associating with personal hobbies or leisure activities is disallowable. We don't just go to the recreation center and start spending our money because you are the owner of the business. To any charitable organization that is not recognized by the tax authority is disallowable. Fines and penalty imposed by regulatory authorities, they are what? Disallowable if the tax authority did not recognize it. Now, expenses for personal legal matter. You have a legal issue. The company is not supposed to foot it for you. It is your personal legal issue. So handle it with your personal money. Disallowable. Personal travel expenses, disallowable. Expenses for residents, disallowable. Hope you're seeing it. Life insurance premium, disallowable. Interest on personal loan, disallowable. Disallowable. Capital expenditure not related to business operation, disallowable. Depreciation is disallowable automatically. Depreciation is used to in place of capital allowance. And this capital allowance, I think I explained it in detail there. It's used in place of capital allowance. In fact, that is the first thing they are adding back immediately. You add back your depreciation, add back your disallowable expenses to your net profits. Then now we compute your tax liability to give you the normal amount you have to pay. Non-business related to travel expenses, all those ones, they are disallowable expenses. So they are all this. So what the tax authority does is that after you must have prepared your audited financial statement, They will start with the net profit. They will now add depreciation and other disallowable expenses. They will add them back and now recompute. Now, mind you, your net profit is this. Now, they will not check your expenses, the expenses you've analyzed, and not pick, oh, this one is not allowable, this one is allowable, this is disallowable. They will not carry all of them and add back, and recompute it to get a new tax liability that you will pay. So it is expected that you know the difference between these two, so that you don't compute tax liability and you tell your client that your tax liability is 5,000 naira, and getting to the tax office they realize that your tax liability is 15,000. Well, how do you want to explain to your client? Is it that you don't know what you are doing, or what? You're supposed to tell him the exact amount, and he has given you the 5,000 naira. You want to go and meet him to give you 10,000. So it's better you know the nitty-gritty, the difference between these two, and it will go a long way to help us in computing our company income tax liability. I believe this video helps. I believe it helps a lot. So we are going to do more. So when doing our company income tax, it's going to be easy for us. Thank you very much, and God bless you for coming around.